all, and I'm very excited to have her on because Loretta, how long have you been selling insurance for?
Ooh, that's a good question. For a couple of years.
Couple
Couple
of
of
years.
years.
Okay,
Yeah.
awesome. And you're the absolute everyone calls you the IUL queen because you crush IULs. And I love your flow because you really make it super simple. And I feel like a lot of people when they're first getting into IULs, they feel a little bit overwhelmed and like, oh, I don't know all the benefits and pros and cons, and it's just like this crazy concept. And then when you explain it, they're like, oh, wow, it's
Simple.
really that simple. And you're like,
Yep.
yeah. So um, so I'm really excited to hear your flow and hear your process as to how you do things. But first of all, give us a backstory on what you were doing before insurance and how you got into this industry.
Got it. Hi, Prosper. You guys are like one of my favorite teams. You guys are super hardworking, just amazing energy. So I was super excited for this training. So my name is Loretta. I before insurance, well, I've always been in the contracting world with in the IT world, just contracting here for the government here in DC. So cool thing, cool career there. I've always loved it. Or liked it rather, not loved it as much as I love the insurance industry. But I got in the insurance industry a couple of years back when someone random just talked to me about it, and I was like, "Oh, this is great. We get to help people, and we get to make money. It makes sense to me." And then I was with a previous company, with another company that I won't mention the name, and where we only sold to our friends and families. Okay, we only sold to our friends and families, no leads, none of that stuff, just friends and family. So you guys can imagine, what the production was like, right? If you're only selling to your friends and your families. And then from there, I found, the previous company, and then here I am with Pinnacle, of course, just being able to work with Gabe and Joe and Jonah and Claudia and everybody else has been phenomenal. So I'm pretty excited to be here. But yeah, that's a little bit about me.
Absolutely. When you first started selling, did you start right away with IULs or did you sell a little bit of general life mortgage protection?
I started with IULs. I started with IULs there. Yeah, I started with IULs.
Okay. Awesome. Awesome. And what's your favorite part about selling IULs? What attracted you and it's the
Yeah.
first thing you did when you first started and you've been doing it for a long time and you obviously love what you do.
Right. So when it comes to IOs, the reason why I'm so passionate about IOs, guys, is because, well, not just just advanced markets in general, whether it's IOs or it's annuities or it's infinite banking, all of them. I'm passionate about those because we really get to change people's lives. Of course, along with mortgage protection, because we find IULs in mortgage protection leads as well, right? And we're going to talk about that later. But we really get to set people up for retirement. And that's really important because a lot of people in America are not ready for retirement at all. Like not at all. And with the historical data when it comes to the market, with the market always going up and down, it's very easy for people to lose money. And so when they lose money, they lose their retirement accounts, right? Some of their retirement accounts. And then you see like a 60 or 70-year-old, 80-year-old still trying to work to make up for those times that they've lost. And so I get a lot of joy just helping people not go through that because it does kind of bother me when I see like you guys have seen very like older people working at like Walmart trying to make ends meet. Yeah, that really bothers me a lot. And so being able to help them, just thinking to myself, okay, well, if I help them plan for retirement properly, they won't have to face that. They won't have to go through that. So that's really what I'm passionate about.
Absolutely. Yeah. Properly planning for retirement, but also not being in something so volatile. Because
Yeah.
if you don't properly plan, you're gonna be working at one. But I've also seen certain situations of individuals where they put their money in their 401k. They did prepare for retirement, but then the market tanks and they lose 30%. And now they've got to go get a job and they can't retire because they lost so much of their portfolio that they can't afford to live off of that money that they were living on before. So
Exactly.
not only
Exactly.
properly planning, but also having it in a safe vehicle where they're not going to have the volatility of the market is important.
Yep. You got it, Jonah. Exactly. Right
Cool.
on.
Okay. Um, Loretta, how many appointments are you typically running on a daily, weekly basis?
Whew, right now, I would say, well, the ones that stick, the ones that show up, I would say about 5 to 6 appointments a day. Those are the ones that show up sometimes. And I don't always close them on the first call, guys. I'll be honest with you. I do my appointments on Zoom now. All my appointments are via Zoom. I don't always close them on the first appointment because sometimes, and I don't try to push people. My approach to selling IULs is very conversational. I just have a conversation with people about money and about finance and about their retirement, their goals, and all of that. I don't try to sell them at all. And towards the end, if they're, when I ask them, where, what they're thinking about, how much they can contribute maximum and minimum, that's how I approach it. And we go through the illustration that show them exactly what their max will look like and what their minimum will look like, right? And then I'll ask them if they think that money will be good enough for them to retire based on the goals that they told me they wanted to accomplish by the retirement age, because I'm already asking all of those questions in the very beginning. So to answer your question, Jonah, I'm running about 5 to 6 appointments a day. Those are the ones that show up. I don't always close them on the first one, but I think most of the time I will close them on the first one. A lot of times I'll close them on the second or third, depending on how big it is and how crazy their goals are.
Got it. Okay. So you're sitting 5 to 6 people. How many appointments are you typically booking then? You get 5 to 6 sits.
Sometimes I'll book like 10 and then only 5 or 6 will show. So it's like 50%, 60% sometimes. Other times I will book 4, 5, 6 appointments. All of them will show up. But I was just giving like the average
Sure.
of the amount of appointments that I will run a day averagely.
Got it. Okay. That makes sense. So pretty similar to a mortgage appointment booked. Cool. Okay. And so you're getting, 5 presentations, which I love what you said because we preach that from the top of the rooftops. 5 presentations a day.
Yep.
So all of them, you don't sell anything. Make your goal
Yep.
5 presentations, and that's going to really help you excel in this business. I promise. If every single person was getting 5 presentations every single day on this call right now,
Oh yeah, you
they would
crush
all
it.
be writing 30K.
Yeah.
So
Agree.
that's huge. Well, let's do this. You just want to call me like I'm a lead and run through
Yeah.
it?
Sure. So let's do I know that I've spoken to a couple of your guys here, and I know that they were thinking about start purchasing some IUL leads and start running. So do we want to role play IUL leads to how we book an IUL lead appointment and go there, or you want to do a mortgage protection?
Let's role play an IUL
Okay, perfect.
and how you run it.
Okay, perfect. So let's just say you guys purchase, one of the IUL leads from the Pinnacle Hub, or Lead Hub rather. And okay, so I'm calling you Jonah. Ring, ring, ring.
Hello?
Jonah?
Yeah.
Wait, sorry, really quick. We're booking an appointment, okay? This is not going to be one call close. One call close.
Okay.
We're going to book an appointment, okay? Ring, ring, ring.
Hello?
Jonah?
Yes.
Hey, Jonah, this is Loretta giving you a call here. I'm giving you a call in regards to that request you submitted online. You wanted to know more about IULs, index accounts, growing your money in the market tax-free. You remember, right?
I do remember, yes.
Awesome, awesome. So again, I'm Loretta. I'm the agent that has been assigned to give you that information. Just wanted to set up a time here where we can go over that information, see if it's even a good fit for you or not. What time usually works best for you, mornings or evenings?
Um, let's do mornings typically work best for me. We'll just get knocked out first thing.
Got it, got it. Okay, I have 9 a.m. I have 9 a.m. and 11 a.m. Which one works best for you?
Let's do a 9.
9? Perfect, awesome. Hey, Jonah, it's gonna be via Zoom. You're familiar with Zoom, right?
That's the thing where you can, like, the video conferencing thing.
Yep. Zoom is like Skype for business. Okay. So it's going to be a Zoom call. Obviously, I want you to see me and I can see you as well. And then we can talk about this, see if it's a good fit for you or not. I'm going to send you a Zoom link about 30 minutes to an hour right before the appointment. Okay.
Okay, hopefully I'll be able to
Perfect.
figure it out.
Now,
My wife may have to help me, but I'll get it.
absolutely, yes. And I can help you out too. It's very simple, very easy. It's just a quick link, click right through it, and it'll take you right to my screen. Now, Jonah, how do you usually keep track of your appointments? Do you write them down, put them on your phone, or what do you do?
I put them in my calendar.
Perfect. All right. So do me a favor, grab your phone and just put on your calendar while I put on my calendar as well. Okay. Just want to make
All
sure
right,
that you
I got my calendar up.
perfect. Awesome. All right, Jonah. So again, I will send you a Zoom link and I'll see you at what time again?
Oh, we set for 9 a.m.
Perfect. All right, Jonah. You have a fantastic day. Talk to you later.
You as well. Thank you. Boom. Do you go for any one call closes, or do you only book appointments?
I used to go for one call closes when I used to go for one call closes when I only did it on the phone. I also noticed that it was not as effective. And so well, it was effective. I was still closing a lot of business, but I noticed that I would get a little more objections, a little more pushback. So I started doing Zooms because once I get you on Zoom, I'm closing you.
Yeah,
At least
100%.
that's my affirmation. That's my mantra. I get you on Zoom. I get
Absolutely.
you to see me. I get you to meet with me. I'm closing you.
Okay. So book an appointment. You get me on Zoom. And then I show up for the appointment, and where are we going from there?
Yep, perfect. So so you're right here. Hey Jonah, how are you doing today? Da da da. Good, do all the report, talk a little small talk there, a little chat, we laugh and whatever, make them laugh a little bit, make them smile, make sure I keep them calm and all of that stuff, get them loose. Um, so Jonah, tell me when you requested that information, what were you thinking about? What were you looking for? What was on your mind? Just say something like retirement planning, da da da.
Yeah, I was just looking for something to, I heard something about, being your own bank and, retirement account or setting up some sort of retirement account that I don't have to pay taxes on. Kind of
Okay.
wanted more information on it.
Got it. Got it. It makes sense. Yeah, that's what a lot of people are usually looking for. Got it. So, Jonah, what I'm going to do here is I'm going to ask you a couple of questions, couple of health questions, couple of financial questions, and then I'm going to talk about some very basic concepts there. And then at the very end, I'm going to show you what, depending on what our conversation is like, I'm going to show you what your account is going to look like. And then at the very end, we're going to submit a proof of coverage. Sounds good? We'll put an
Sounds
application.
great.
Perfect. Awesome. So I set the stage, obviously, like mortgage protection, I set the stage, let them know what we're going to do. So in case they have anything there, they start saying, oh, I don't know if I'm ready for this, ready for that, whatever. I'm not even going to waste my time going through the whole presentation. I'll just kind of have a quick chat with them and kind of, I don't know, schedule it or something like that. But I barely get that. So, all right, Jonah. So go to the financial inventory, guys. You guys already have the financial inventory. So, go through the same thing. Make sure that you eventually ask them if they have any 401ks, any 403bs, any retirement accounts there. And then another thing that I add to that as well is finding out how much cash they have in their savings accounts. A lot of times I've noticed that agents will ask them, hey, how much are you saving typically at the end of the month? And they'll say $1,000. I ask them, oh, ballpark about how much do you have saved right now? The reason I'm asking for that is if they have a bunch of cash saved in the bank account, of course, you guys know this because you guys have heard me say this several times, that's a fixed account. And so, long-term inflation is going to eat it up. So they're eventually going to lose money anyway. So we want to figure out if they have a bunch of money there, we want to figure out what to do with that money, put in something else where it can grow for the future, right? So that's that. All right, so Jonah, where was I? All right, so Jonah, we've gone through the financial inventory. It's really quick. I go through in like less than 5 minutes, really quickly there. Figure all of that stuff out. And then, so Jonah, from here, grab a pen and a paper. You're going to want to take some notes. We're going to go over some very basic concepts here. It's very simple. A lot of these things, you already know about them, but just bear with me. It's going to paint a big picture for you. And I'm going to go over the 3 ways money grows. You guys have heard me say it a lot of times. It's very simple. 3 ways money grows takes like 5-6 minutes. You can just speed right through it. The reason I do that is because I want to give them some value when it comes to education, because my approach is very educational than selling. I'm not trying to sell them. I'm trying to educate them, give them as much value. And so that when I do ask for that sale, you can't say no, right? It's like kind of like what Gary Vee says. What does he say? Jab, jab, right hook. Like give them a lot, and then ask. When you ask, they can't say no, right? So because you've given them so much value, you've educated them a lot. And so they know that you know what you're talking about. They're asking you now for, at the end, they're asking you what you think they should do because you've just given them, you've just broken everything down. Perfect. So, Jonah, no matter where you are in the world, money only grows in three different ways. That's it. You could be in Japan, you could be in Africa, you could be in the Caribbean on the beach, you could be in the United States, it doesn't matter. Money only grows in three different ways. That is fixed, variable, and index. When it comes to the fixed, it is a savings account, checking accounts, CDs, money markets, that's it. The great thing about having a fixed account is that your money is safe. The downside to having a fixed account is that it's that your money is growing very, very slowly there. So eventually, inflation is going to eat it up because because you cannot, you're not going to be able to afford everything out there. So like the cost of food, water, everything else keeps going up, and your money and the bank isn't giving you anything, so therefore you're going to lose money. Now, the second way that money grows is variable. 401ks, 403bs, TSPs, Roths, cryptocurrency, real estate, mutual funds, stocks, all of that stuff. By the way, I'm just going through this very fast because we want to call, and I know that we have very limited time, so I'm just trying to speed through it. But usually,
Cut it. Or Loretta. So I want you to just slow it down, and I want you to use like the same tonality, rule pacing. We don't need to rush anything. We've got time.
Really?
So
okay, cool. I was trying to make sure I rushed it up because I thought that we're on a time crunch here. Okay,
no, you're good. We all want to hear your exact flow. Don't do anything differently. Just treat me like I'm a regular client.
Okay, got it. Okay, perfect. All right, so the second way that money grows, Jonah, is variable. And with variable accounts, these are things like your 401ks, your 403bs, any TSPs, Roth, cryptocurrency, mutual funds, stocks, all of that stuff there. That all falls under a variable account. Now, the good thing about having a variable account, Jonah, is that when the market does go up, your money does grow because it's tied to the stock market. Now, the downside, though, again, is that because it's tied to the stock market, when the market does go down, you can lose a portion or all your money, right? So if we were to have a growth chart for this, you would see that it's very unpredictable. It's almost like you're gambling with your money. It's up and down. Market goes up, money grows, market goes down, market goes up, money grows, market goes down, goes down. Very unpredictable. You just cannot tell what's going to happen to your money. Now, the third way that money grows, Jonah, is index. Now, with the index account, it comes in two different categories. It is the fixed index annuity, which is an FIA, and the index universal life, which is an IUL. And I'll say it again, Jonah, in case you're writing it down. It is a fixed index annuity, which is an FIA, and index universal life, which is an IUL. Okay. Now, the best thing about having an index account, Jonah, is that because the good thing about having an index account is that it is safe. Okay. A lot of people don't know this, but life insurance is the safest place to put your money in. And the reason is because it's backed up by the FDIC and it's backed up by the government. You barely ever hear that a life insurance company has gone underwater. They might get bought, they might get merged, but barely get underwater, okay? Now, the other side to an index account, Jonah, is that it is floored at 0 and grows anywhere from 9 to 12%. I say 9 to 12, guys, because some of the companies do offer 9% and others offer 12%. Doesn't really matter, but you just want to, give that range there. 9 to 12%. So what that means, Jonah, is that when the market goes up, your account can grow up to 9 to 12%. And when the market does go down, you will not lose any money in the market. You will not lose any money at all, regardless. And you have a contract with this company saying that they cannot lose your money no matter what. Make sense so far, Jonah?
Yes, that makes sense.
Perfect. Awesome. So an example of this is this. Let's say the return on the market 1 year, Jonah, is about 20%. Your account is going to get that 12%, the cap, right? Let's say the return on the market 1 year is 8%. Your account gets all the 8%. Now, let's say the market is down. Everybody's losing money. Meaning everything is down. Everyone on the variable account is losing money. The market is down by negative 38%. Well, guess what? In this case, this is where 0 becomes your hero. You would not lose a single dollar here ever at all, okay? So your gains and your principal, everything is locked in. And when the market picks back up, your money continues to grow. Make sense so far?
Wow. Yeah, that makes a lot of sense.
Perfect. So if we were to see a growth chart for this, when you see that it looks like a 0 is a hero, yes. You see that it looks like a staircase. It's always going up. Market goes up, money grows, market goes down, everything is locked in. And when the market goes up, money continues to grow. I actually use hand gestures here because they're looking at me. I'm like, I'm actually using all this stuff. Okay, so that's it. Any questions for me so far, Jonah?
No. Well, actually, Loretta, if you could explain, go over the difference between the fixed, variable, and index of
Yeah.
how you break that down with the client for anybody that didn't get that the first time to take notes
Yeah,
on.
yeah, yeah. Yeah. So the fixed accounts and the variable account, or
Yep.
which one?
Yeah. How you explain the three to a client.
Oh, got it. So I just say, I don't know if this, I'm answering your question, but I just say that there are three ways that money grows. It is a fixed, variable, and index. Is that what you're asking?
Yes.
Yeah, that's it. So I tell them that no matter where you are in the world, your money only grows in three different ways. That's it. Fixed, variable, or index. Those are the only three different ways. And so every time you're thinking about where to put your money, just think about, is it a fixed account? Is it a variable account? Or is it an index account?
So fixed account can't hardly outpace inflation. Variable account, it's up and down roller coasters, unsafe, very volatile. And then index is you still get those high returns, but when the market tanks, you're locked in at zero.
Correct. So yes,
Zero
exactly.
zero.
Yep, exactly. So fixed account is safety, but very little growth. Variable account, it is growth, but risky. Index account has the best of both worlds, right? It is safe, it has growth, but it is capped. That's
Perfect.
it, guys. It's that simple. That's it. Okay.
That's super simple. Where are
Yep.
we going from here?
Yeah, so from here, I would ask them if you had to choose one of these to put some of your money in, not all your money, but some of your money in, which one would make more sense to you? They obviously always say index account. I'm doing that intention because I want them to, I'm going somewhere. So they obviously would say index account. I ask them why. Why do you say index account? Oh, well, because it is, it has the safety net there and then it has the growth potential there. Okay, perfect. Then I'll say, then I'll talk about Warren Buffett's two rules to money, which is rule number one, don't lose money. Rule number two, don't forget rule number one. And if I gave you $100 and you decided to invest $100 in the stock market, when the market goes, if the market goes down by 50%, how much do you have left? You have $50 left. Now the market goes back up by another 50%. How much do you have left? A lot of times they say $100, $50, 75, 150 bucks, whatever. I say, actually, it is $75. I said, don't worry. I got it wrong too the very first time before I got in the industry. You don't want to make them feel stupid. Always validate everything they say. Even if it's wrong, it's like, don't worry. I did the same thing too a long time ago. Say the same thing. Put yourself out there. And then I'll tell them that's $75 and I'll say that what Warren Buffett is saying here is this. When you lose your money in the market, it takes 2 times the work for you to get your money. So he's saying protect your principal and put your money in a vehicle where you don't have to lose money, so you don't have to work twice as hard to get your money back before even thinking about gains. Again, I'm conditioning them to see how important getting an IUL is and even to contribute more towards it. So once that's all done, then I'll ask them if they have any questions. Sometimes they might have a lot of questions about the index account, all of that. A lot of times they don't because we've explained everything and kind of broken down everything. Everything is super clear. They don't have any questions. This part should only take you about 10 minutes, guys. About 10 minutes max. And then from here, I would say, and I'll just break down really quick the benefits of an IUL. Say, all right, Jonah, so really quickly, again, make sure you have your pen and paper. We're going to go over the 5 benefits of an IUL. One, obviously, you notice it is a life insurance policy. So in case of any passing, your beneficiaries are going to get a death benefit payout. 2, there is a new feature in life insurance called living benefits. So in case of any critical illness, critical injury, you get money from it, okay? Thirdly, you have the saving account component to it, Jonah. And so your money is growing anywhere from, going up to 12%. Remember, we talked about that earlier. Your money is going up to 12%. You remember, right?
Yes.
Okay, perfect. I get them to answer. So your money is going up to 12%, then you're able to pull that money out later on tax-free, which is the 4th benefit, is that it is tax-free access. All right?
Perfect.
Okay.
And then
awesome.
for everyone taking notes, could you go over those 4 benefits one more time? Because it was important. I want to make sure everybody got this.
Yeah, sure. Death benefit, living benefits, savings account component or cash value accumulation, tax-free. And then the fifth one, the money is shielded and protected. So in case of any lawsuits, divorces, child support stuff, whatever, this money is shielded and protected away from the courts. They can't touch it. Even if you have $1 billion in there, they can't touch it.
That's important. I did not know that.
Oh, it's huge.
So if you get sued or go through a divorce, your money is safe in an IUL.
Yeah, it cannot be touched. It's shielded and protected. So that's the fifth.
That's good.
Yep, I go over those 5 benefits there. And then from there, I'll ask them any questions. No. All right, so great, Jonah. So if you wanted to start saving money aside to put into this, what is a minimum and what is a maximum? Now, I have an idea, right? Because I did their financial inventory, so I know how much they're saving or how much they have left at the end of the month. So I have an idea. So I just ask them that question. So Jonah, just to say you have just say 1,000, just say minimum, whatever, say something.
Yeah, I would say minimum would be 500 and maximum would be 1,000.
Okay, minimum 500, maximum 1,000. All right, so I'm good. So that's a good number. Let's play around with it. Let's see what that will look like. So then I'll show them what $1,000 will look like, and then what 500 will look like. I should start with $1,000 first. Now, Jonah, let's just say you are a 27-year-old male. Now, in this case, if I'm showing $1,000 for a 27-year-old, you want to max fund that. Please do, guys, because let's say Jonah is married, has kids, and he is, let's just say he has about 3 kids, married, and he has about 2 homes, totaling, maybe 500-600K or something like a very high mortgage. And then ask him what his concerns are. Is this more for retirement? All of that. Let's just say that when I did the financial inventory sheet, I realized that he does not have any retirement at all. So this would be used to cover his assets. This would be used to cover his assets, all of that, their income, and then at the same time plan for retirement as well. So you can overfund this at $1,000. A 27-year-old, he's going to still get a huge death benefit, and you're still going to get a really nice size commission too. Now let's just say that Jonah was a.
Can I stop you there?
Yeah.
So I really like what you said, because you're not just selling it as somewhere safe to store your money. You're like, hey, John, we're going to leverage this as income replacement. Yep. We're going to use this, if they have a mortgage, we're going to use this to protect the mortgage, replace your income, and also put a safe retirement account in place for you as well.
Yes. I explained that to them. Make sure that I let them know that this is all in one. So I let them know that, hey, Jonah, what you're getting here is a Swiss Army knife. No matter what direction your life goes, you are good. If you get sick, you have income there. If you were to pass, your family is great. Your kids are great, your wife are all protected, and your assets are covered. Now, if none of this happens to you, Jonah, and in the future you want to access money, yes, you can access money as well. So no matter what direction your life goes, you are covered. So after this, Jonah, you don't need anything else.
That's good. Hey, it's the Swiss Army knife. Yep. No matter what direction your life goes, you guys will be covered. That's good. I like that.
Awesome.
All right, sounds good.
I'll just show them that, and that's it. And a lot of times, guys, when you show them and you show them exactly what's going to look like, they love it. And then you just let them know that from here on, Jonah, what we're going to do here is put in an application. It's only going to take about 5 to 10 minutes. Okay. And what I would need is your, same thing you guys do, same thing we do for mortgage, your first and last name, socials, a driver's license, and which bank are you going to use to pay for this once you're approved? Wells Fargo. Great. So I'm going to need that account number there. And then I'm share my screen and we do the application right there together.
Oh, and then I want to stop you there, because are you showing them, so you're showing them the illustration as to what that looks like?
Yep.
You're screen sharing the illustration?
Yes. So I'm showing them the illustration of what that looks like, and how much they're going to have by retirement, right? Same thing.
What are you showing them specifically on the illustration?
Oh, just, the death benefit, like how much the death benefit will be and how much the cash will be. That's it. Death benefit and then cash. And if they're super technical guys and they want to know all the other details, and most of the time you're not gonna come across those people. But if they want
how often do you run into someone that's super technical that wants to know every little thing about the IUL?
Oh, that's a good question. I don't know the exact number, but I run into them sometimes. And what I do there is I obviously open up the illustration. I just show them the numbers, and depending on the questions that they have. I mean, they might have questions like, oh, what if I want to put this, I don't know, under my daughter's name instead and use this, like all these other questions. I can't think of them right now, but most of the time you don't come across those people most of the time. But when I do, then it's like a 3-4 hour appointment.
Well, very rarely you would say,
What was that?
but rarely you would say.
Not really. I come across them sometimes, like day before yesterday, 2 days ago, I came across one that was super technical. And what I did there was I pretty much opened up the illustration. I showed them like historical data. There's a part on page, I think it's on page 6 of F&G policy. It shows like the comparison, the last what the accounts have done the last 20 years. And you can see that on average, the S&P has outpaced every other one out. They just showed them that, and it has an average of like what 9%, 8 to 9%. Just showed them that.
Cool. Okay, so we're screen sharing the screen, and then what's your saying for the close when you're presenting options? How are you closing in an option?
Oh, I just showed them that, and then exactly what I just said. I just let them know that, hey, the next step, Jonah, will be to put an application here. It's only going to take about 5 to 10 minutes, and I'll share my screen. I'll let them know what I need. I need driver's license, socials, bank account, and I ask them which bank they're going to use to pay for this. Wells Fargo, great. I need their account number for that as well. And I just share my screen and I just start putting the information in. Sometimes I will give them control so that they can on Zoom, so that they can put in the information themselves.
Okay. Are we deciding on an option before we submit the application, or are we just going for the application and deciding what we want to pay into it later?
Oh, yeah. So I told you that I mentioned that let's just say that they picked the 1,000. So then I'm showing them that. So you gave me 1,000 and the minimum 500. I'll show them the $1,000 and I'll show them what it looks like. Now, saying that, let's just say that you are a 27-year-old male, married, all of that, and I'll show them that's it. Like, that's what it looks like. And most of the time, guys, remember at the end, like you sold them already when you when you give them so much education and three ways money grows, and you really instilled in them like those principles of not losing money. That's really where you're selling them. The illustration, by the time you get to the illustration and the numbers and all of that, they're already sold because you're giving them so much value. So you don't need to sell them again on how much to put in. Now it's just a matter of budget. But then again, you as the agent have already figured that out in the very beginning when you did the financial inventory sheet. So Jonah, that's why you see me not so focused on how to close them and all, because you already close them when you give them so much value on the educational part of it. And if it's an
Gotcha.
You see what I'm saying?
Yeah. Okay, that makes sense.
Yeah.
Cool.
So my approach is very conversational. I'm not trying to sell them. I'm just having like a conversation with a friend about money and finance. That's it.
What if I tell you, you know what, Loretta? I just gotta check my budget and think about it, and I'll get back to you.
Okay.
What are you saying there?
Yeah, that's totally fine. Now, when you say check your budget, Jonah, are you talking about figuring out how much you would like to contribute, or what do you mean by that? I'll just ask them, what do you mean?
Yeah. I just need to figure out what's comfortable. What makes the most sense for me on a monthly basis to put into this.
Got it. Now, Jonah, if that $1,000, remember that was just numbers we're playing with. If that $1,000 you think is a little out of your range, we can go low. We can look at 500 and see what 500 looks like with that. Does that sound fair?
Yeah, that sounds fair. I just want to, decide on what makes the most sense before I sign up.
Got it. That makes a lot of sense. Okay, really quick. Let me just show you what $500 will look like, so that when you're doing your thinking and your budgeting, you kind of have an idea of which route you want to go. Okay. Then I'll show them what $500. Okay. Then I'll show them what $500 will look like. And as I show them that, I'll let them know that you can always add more later if you wanted to. But this is really a good place to start, Jonah. A lot of our clients, sometimes they start here, and then eventually as they make more money and as their finances get better, they can always go up. All right.
Got it. Okay.
Perfect. All right, Jonah. So let's do this here. Let's do this, Jonah. Let's get together again. Let's say tomorrow, or let's say tomorrow or Thursday. What is that? Which one works best for you?
Tomorrow should be good.
Tomorrow should be good. Perfect. So let's do same time. How does that sound?
Sounds good.
Perfect. So Jonah, when we get back here tomorrow, like I said, the application only takes like a few minutes. Again, you're not paying anything today. You do have to get approved first. So once you go through the approval process, it usually takes anywhere from about a week or so. Once you get approved before you start making any contributions to the account, okay?
Okay.
Perfect. All right, Jonah. Then we'll close from there.
Boom. Okay. So let's say, I'm like, hey Loretta, I want to go with the $1,000 option. We go through the application. Where are we going after that?
We go through the application, then after the application, then we submit it.
Yes.
That what you're asking?
Yeah, submitted. Do you have any special tie downs, or what do you do after the app is?
Gotcha. Oh, yes. So the way I do my tie downs, it's so funny. I just asked them, I said, okay, well, Jonah, good job. Congratulations on getting your family protected, getting yourself, securing your future. How do you feel about this? I genuinely want to know. How do you feel about this, Jonah?
I feel really good. Now I can go to
Awesome.
bed with peace of mind knowing my retirement is protected.
Yeah, right. Awesome. So again, my priority here is that you are happy, you are comfortable with this. So I'm happy that this makes you happy. Now, again, Jonah, if you have any questions whatsoever, I'm always available. Feel free to give me a call, give me a text, and send me a text, whatever is preferable for you, and I'll be able to answer any questions. And just remember that from here on, you're pretty much stuck with me for life. Hopefully, that's good news for you, Jonah. Hopefully, that's good news. And if you have anything else, just let me know, okay?
Okay, perfect.
Okay, awesome. Now, if you take one, let's see a question. All right,
And then
so
we'll open it up for questions after this role play. So everybody hold your questions, please. And I know everybody's eager to ask you a lot of questions. So we'll get into that here in a few minutes.
Yeah. So that's it. I just make sure that at the end I make them feel good about this. I make sure that they're happy about getting this. I let them know that I'm always available, especially if they're putting a lot of money. I let them know as well that if I don't pick up my phone, just know that's because I'm on one of these calls like this, like with the client, and I always get back to you later on, and just give them that assurance and peace of mind. Because a lot of times when people are putting so much money, they're also thinking, oh man, like, is this gonna work? Is this true? Yada, things like that. There's some skepticism behind there. But the way you do that is just the way you overcome that is just by making them feel comfortable. That's it. That's how I do it.
Got it. Okay. Awesome.
And from there, from there we might have a little chit chat here and there, but most of the time I just, make them laugh and then end the call.
Perfect. So very, very simple, very self-explanatory.
Yeah.
All right. Well, let's open it up for questions here. So looking at the questions here in the chat, we
I have one.
All right, Claudia, you can go first.
Thanks. Loretta, what do you do like after like building everything up, you get everything submitted and it comes back declined?
And it comes back declined. Yikes. Well, two things. Two things. One, we didn't do a proper financial, inventory. No, let me not say that, because a lot of times clients lie. Sometimes clients lie. They say, "Oh, I have nothing," and then they have like everything on their record. But just make sure that one, you properly vet them, and then when it comes back declined, I just try another carrier. A lot of times I don't get that, but if it does, you just try another carrier. It comes back declined. And the reason I say that, Claudia, I'm sure you know this already because you've done a lot of these as well. But the reason I say that is because this takes a little bit to get approved, right? And so I'm making sure I have as much as I possibly can. I also ask them during the financial inventory, any medications you've been prescribed but not taken. And so they're like, oh yeah, I was taking, I'm taking XYZ, whatever the medication is. At the end of my application, I am letting them, I'm putting a note there. A lot of times I write a whole letter to the underwriters, letting them know that, hey, Mr. Jonah was prescribed XYZ in 2014. He never took it. He chose the healthy lifestyle. He exercises 5 days a week. He eats healthy. He's on a vegetable and meat diet, whatever it is, whatever I can say there to make sure that they are, they look like they're on the right path. The reason I do that is because underwriters also take that into huge consideration when they decide if they want to approve the client or not, so that way they're not just going based off of their records. They're also going based off of what you're saying to them, because you know this client better than they do. So that's one of the things that I use, Claudia, to prevent declines there. when it comes back decline, the only thing is, that's a very good question, Claudia. The only thing that you can do is try another carrier. There's nothing else we can do.
Huge. Okay, awesome. Henry asks, do you use an increasing death benefit or level death benefit?
If it's a younger person, I use increasing. If it's an older person, I use level just because it's going to take them a longer way.
Yeah. Yeah, I typically ask them, I'm like, hey guys, so do you guys want to just pay into this and set it and forget it and never have to worry about it again? Or do you want the option to pay extra lump sums in from time to time? And if they just want to pay in, set it and forget it, we'll do the increasing death benefit. If they want to have a little bit of wiggle room to add some cash here and there and increase it, then we'll go with the level death benefit.
Yeah.
Isaac asked, what primary carriers are you writing for IULs? This is a big one.
Yeah, it's a big one. So we have some carriers coming in as well. We have F&G, so Fidelity and Guarantee, getting North America as well. We have some Foresters. Foresters is mostly a UL product, so it's not indexed. And then with the Foresters one, and then we have a couple of others that are coming. But my to go is F&G. I know we have a couple of others coming in, guys. So maybe my to go might change. It might just change depending on what the underwriting is like. Go ahead, Jonah.
But for right now, your go-to is F&G number one, and then if F&G, Forester Smart UL.
No, North American. Then North American.
North American.
North American.
Then Foresters.
Yeah.
Cool. Okay. Cool. So F&G, North American, Foresters, and if you guys don't have F&G, you guys should be having it within any day now. We just got the contracts approved, so we're moving down the hierarchy in the chain.
Right.
Cool. All right. Any other questions? Just feel free to unmute and ask Loretta.
Yeah, I was gonna ask.
Oh, you can go ahead, Derek.
Sure. No, I was just gonna ask, because I know a lot of when you're looking into IULs is a lot about like doing the right thing for the customer, not so much the comp. I know I'm looking at North American, the comp is higher than F&G, but also I know that I've heard F&G has a really good value as far as the compounding interest, like it's like the best performing one, I guess I should say. Like what's the outlook on like the best performing, if that's what you're doing for your client? Kind of just touch on that, kind of distinguish between which carriers perform better.
Okay. Honestly, I used F&G for a long time because those we only had NLG and F&G over at the practice company, right? Those are the only two options that we had. But it doesn't mean that all the other ones they don't work or they're not great. North American is also great, and all the other carriers that we're going to be getting they're all phenomenal. It also depends on the cost of insurance. So guys, always compare it. If you want to really know which one works for the client, just look at the cost of insurance. Once you can take the same client and plug it into the three carriers and figure out which one gives them more, depending on what their goals are. Because yes, the cap might be higher, but the cost of insurance might be a little higher. Does that kind of make sense, Derek?
Yeah, that's actually perfect. So you're just running it through three at the same time, but you're really only showing them one after you figure out kind of what their goals and what the needs was. And then you're like, hey, this is probably the best one for them. I'm going to show them this one, or are you showing all three?
No, I'm not showing them all three. Just choose one. If you show three, you're going to make your appointment very long. And you're going to make your appointment very long, and you're going to confuse the client, and confused clients don't buy. Just choose one. So before that, just kind of do your due diligence on what, figure out what your to-go your carriers are. I figured that out, that I like F&G. And so I do F&G and sell them on F&G. So when we get all the carriers, just choose one, right? Whatever Prosper decides, just choose one and then just sell them on that. Now, if it's one of those things where the client cares more about the death benefit protection versus the cash value, then you already know which carrier to go to. Either you want to do the the North American death benefit protection one only, or you want to do something else, right? So once we get our carriers, just kind of figure out, and I'm sure we'll have like a cheat sheet or like a breakdown of each one and give and send it out to everybody. I'll create that, send it out to everybody so that we can kind of have an idea, depending on what the client wants, where to go to first.
Perfect. Perfect.
Cool. What other questions do we have?
Hey, Loretta, I have a question.
Hi.
Can you help me understand the concept of like treating it like a savings account? Is it being borrowed from the death amount or from the cash value?
Yeah. So that's a good question. So when you take out money from the so there are three different columns. There is there's more, but the main one I want to touch on is the death benefit, which is obviously everybody knows what the death benefit is. And then you have the surrender, the account value first. The account value, that's the money, that's the value of the account. The surrender is what you have access to that year. Eventually they catch up at some point. Okay, those two numbers will catch up. Now, when you take out money from the surrender, it comes out of the death benefit, and then the surrender stays at that same amount and continues to grow and compound as if you didn't touch it. So you're using the life, that's if you're taking out for cash. That's when you get to use the life insurance company's monies of your own. That's how I say it to them, or that's how I tell them that if they ask that question. And let's say that they pulled out, let's say the death benefit was about 400 grand, and then they have about, I don't know, let's say 50 grand in the surrender value. And they pulled out that 50 grand, that comes out of the death benefit. Now, let's say the following day, they pass. They will get, the beneficiaries will get the death benefit minus that 50,000. I want to make that clear. Does that make sense, Derek? Oh, whoever asked the question, sorry. What's your name?
No, you're fine. That was Emmanuel.
Yeah. So
Oh, yes.
My question is there a certain amount where it gets to a death amount before it started taking away from the cash value? Is it capped at 50,000?
Say that again. Say that
Like
again?
is there a certain amount where they borrow against from their life insurance policy that they'll take away from the death amount?
No, it's whatever is in the surrender is what you can take out.
Gotcha.
Yeah.
Gotcha.
If I understood your question properly.
Yeah, so everything Loretta said, and I think a simple way to understand it is like when you go to buy a house, and let's say you buy a home and your house is worth 300K, and you take out an equity line of credit and you borrow against your home isn't worth any less. It's still worth the 300,000. And when you go to get a mortgage, the collateral on the mortgage, the collateral is your income, not the home. So it's the same thing with this policy where let's say you take out the policy, you take out a $50,000 loan and you get hit by a bus the next day, the death benefit is the collateral against the policy. So if you get, like Loretta said, if take out a $50,000 loan, pass away the next day, well, the loan will simply just be taken out from the death benefit, which will be paid to your family. So does that answer your question? All right. Well, that helps out. Cool. Yes, sir.
So it's actually a two-parter. The first part is, how do you determine what the limit is on how much they can pull out for that specific year? Because I know you said there's a limit per year. Then the follow-up question would be, how do we determine how much extra money they can add? Like if we got somebody at like I don't know, like $200 a month for their payment, but they want to dump 10K in there. Obviously, like from a legality standpoint, it has to be a life insurance policy first. But like, how do we determine what their limit is on how much they can add to that cash value?
Yeah. So the first part you said, if you're asking if there's a limit they can take out, the limit is whatever is in the surrender value. That's the limit that they can take out. So if they have 100,000 in there, they can take out 100,000. If they have 50 billion in there, they can take out 50 billion in the surrender value.
That's separate from the coverage amount at that point. It's just whatever that's surrender value. Is that basically the cash value?
Correct.
Okay.
Yes, correct. Surrender value is the cash value. That's what they can pull out. So whatever is in that column, that's exactly what they have access to.
Gotcha.
And then what was the second part again? How do you determine, oh, the maximum? It tells you that each company, the illustrations, they always tell you right there what the maximum is. It tells you right there what, how much they can, let's say if it's 200,000, $200 a month, that's 2,400 a month. Off the top of my head, it's about, I think usually it's like 2 to 3 times that they can put in there maximum before it gets taxed.
Got it.
Oh, okay.
Now for that surrender value, once you borrow against from it, do you have to pay it back, or will the interest just keep accumulating? You could borrow.
Yeah, the latter. Yep, exactly what you just said. Yeah, it just keeps. You don't have to pay it back, and if you do pay it back, you're paying it back to yourself. If you don't pay it back, you owe yourself. But as you keep making those payments, eventually it continues to grow and compound. Yep, you said it right. You understood it.
Thank you.
Yep, you're welcome.
All right, we got time for one more question.
Loretta, I had a quick question for you. Do you have a script that you followed when you set those IUL leads appointments at all?
No, but there is one on, it's all in my head. I just like say it over and over again. Like I said, it's just very conversational, but it's on, there's exactly the flow on Pinnacle website. If you guys go there under the IUL lead, IUL script, that's exactly that.
So Pinnacle website, Agent Hub, the IUL script on the website already is your exact flow?
Yes, it's exact for the outline is there. Yep.
Cool. Awesome.
Thank you so much.
You're welcome.
Oh, and then Brandon asked the question, is the surrender value something that the client will be able to check on their own?
Yes. Most companies, well, every company, they should, you have access to that online portal where they can see their money. Yep, they all do.
Awesome. Cool. Alrighty, guys. Well, Loretta, thank you so much for hopping on, pouring into your words of wisdom about IULs. And then if agents have any more questions, how can they reach you?
Oh, I feel like everyone already has my number. It's right there. I'll put it right there. I'm typing it out right now.
Thank you so much. Only, please no stupid questions. So you're hitting Loretta up. She's busy. So please be intentional with her time.
Thank you. Yeah, you can text, call. I mean, most of you have already been doing that. You're pretty good at that. So just text, call, whatever works for you guys. If I don't pick up, I promise I'm not ignoring you because I'm on another call. I'm very good at like responding and like, and picking up calls. So just give me like some time if I don't respond immediately.
Very cool. All right, Loretta. Well, we really do appreciate it. Guys, we'll get you out of here. Let's make an intentional day, an intentional week, and we will talk very soon.
All right. Bye, everyone. Bye.